Stocks seem to be crashing through the floor after it looked like they shrugged off the sudden drop that resulted from the Japanese carry trade, with the S&P 500 now being down about 4% over the past week and the Nasdaq being down 6% only over the past week and over 7% since the most recent high. So let's take a look at what has been causing all these stocks to drop this much over the past week, see if there was any news to speak of during this time in my own portfolio, and talk about what I'm planning to do over the next couple of weeks, as these will be very important. So let's start off by looking at what has been causing stocks to crash as much as they have done over the past week. And basically what we know is that we are, traders, investors, funds are looking at the potential for a recession. This is highly in focus, and over the past week basically, this has been coming back very strongly. But this is not something new, because over here we have a sign from October 2022, 5 signs the world is headed for a recession. Now, this was mostly related to interest rates and inflation, but basically recession talks are of any time in the market. This happens, basically always. And at the beginning of the year, this was happening in 2023 when the markets were at their lowest. This was happening because, with a drawdown that we had, the stock market crash or bear market that we had, there were still talks about a recession and the markets were not down enough. However, what we do know from the most recent talks is that it's not that much about inflation. Inflation should be under control. Maybe there are some people that talk about deflation, but this is an entirely new and different topic. No, the most recent issues are regarding the jobless numbers. Because a few weeks ago, the Bureau of Labor Statistics did their annual review of their numbers. And during that review, the data suggested that there were 818,000 fewer jobs in March of this year than were initially reported. So over the entire year, they revised the job growth down by 818,000. Now, this has made people very skeptical about the jobless or the job gains numbers. And this has been causing friction in the markets. And this was very well visualized over the last week. Because last week we got the JOLTS job openings, and we can see that they were going down. Now we can see this even better when we zoom it out and get the full graph here. We can see a steep decline. Now we can see that over the past 10 years we are still at a very elevated number for the job openings, but we have been coming down massively since the beginning of 2022. And if we really zoom in on that last part, we might even suggest that it's going down quicker, like it's curving over to be coming down even faster. Now we also had the ADP employment change. And this chart may look a bit weird because we had the COVID crash, but this is the same 10-year chart. But when we look in, or when we zoom in from basically September 2020 up till now, we can also see that the employment change is coming down in the ADP reports as well. So this is not looking all too good for being bullish about the jobs, because we want jobs to soften a bit for the Fed to initiate rate cuts. However, right now the question becomes, are they gonna cut interest rates in a luxury position? Or are they gonna cut interest rates because they absolutely have to? So here we have another one of those job numbers, and we have the non-farm payrolls. And the consensus was for 139 added jobs, and what we got was 118,000. So once again, really not good. We keep coming in soft, and that has been the trend, which is what markets just don't like. So what we can say is that markets are very fearful about the Fed needing to cut rates, and not just cut 25 basis points. Oh, are they going to cut 50 basis points? That would be better according to the markets, but that might be at a bit of an elevated pace, which may suggest that the Fed feels a bit pushed into a corner. But the job numbers, if they continue to deteriorate, then that might seem as if the Fed is too late. And with the Fed behind the curve, once again, just like they were with the inflation numbers, that will be a real issue. And that is what markets are trying to figure out right now. But before we are there, we first will have next week where we will have inflation rates, the month-over-month numbers, where the core inflation rate is expected to come in at 0.2%, and the inflation rate also at 0.2% month-over-month. We will have the year-over-year inflation rate at 2.6%, and the core inflation rate, they don't really have a consensus estimate, but the prior was at 3.2. Now then on Thursday, we will get the PPI year over year, the PPI month over month, which is expected at 0.2. The core PPI, well, no expectations, but the core PPI month over month, we have a consensus of 0.2%. So the CPI, Consumer Price Index, and the PPI, Producer Price Index, they will be very important in this story. Because if all of a sudden the CPI number crashes and maybe even dips below, say 2.5%, 2.4%, then the markets will see another big issue. Because what if we are heading to deflation? That would be a real issue. But as far as the doom and the bear thesis of the recent weeks go, I'm not all too worried about. I see it as a big opportunity. And there are some things also shifting in my portfolio. Now let's go through the companies that had real news items, not just an analyst revision or any tiny news like that, just real news. Because if we look at my portfolio and starting with PayPal, we can see that the stock was down quite a bit. But we did also had very big news. Because first of all, I did want to show one price target adjustment, and that's from JMP Securities, because they adjust their price target to $125, up from $82. And I think this is hugely positive, because this is by far and away the biggest jump I've seen. I've seen some $10 increments on price targets, maybe 15, but a price target increase of this margin, that was absolutely the first one I saw. And that is very bullish in my opinion, and I think many more will follow. But the big news was that PayPal integrates their debit card with Apple Pay. Now, PayPal Holdings said Thursday it is providing customers with more ways to pay by allowing them to add their debit card to Apple's Apple Wallet and use it with Apple Pay. PayPal also said it is expanding its rewards program to enable customers to get 5% cashback on up to $1,000 in certain category spend areas monthly when they use their PayPal debit MasterCard. Now this is huge news for expanding their customers. However, 5% cashback is a lot. And that is a real big number. Now, finally, PayPal is going to another conference, and Alex Chriss will be speaking at the Goldman Sachs Communicopia Plus Technology Conference. Now, that was quite difficult to pronounce, but Alex Chriss will be going there. And the last time Alex Chriss went to a conference, we saw the stock absolutely skyrocket afterwards. It jumped up I think it was 10% in 3 days or something. The stock did amazing afterwards. And I hope that Alex Chriss will be able to give a stronger case once again for the stock as he did last time. But we'll see. Now then we have Lululemon. And Lululemon had something really bullish happening in my opinion. And that is that we got this Form 4. Now Form 4 basically means that someone has been changing their ownership. And in this case, it was Calvin McDonald, the CEO. He bought 4,000 shares for a price of about $260. So roughly a bit over $1 million of Lululemon stock with his own money. Now, we know that there are many ways or many reasons why someone would sell a stock. But there's only one why you would buy it, especially 1 million worth of it. Now then we had S&P Global, a small stock in my portfolio, and they got a slap on the wrist. We see here S&P Global Ratings Division agrees to pay $20 million penalty in settlement with the SEC, and this was to resolve violations for record-keeping rules. Now Moody's also got $20 million, the same settlement, and Fitch got $8 million. They all do it, so it's a slap on the wrist. But it was good to highlight because it is real, actual news. Now then finally we had Celsius Holdings. And I mean, oh boy, this was bad, right? The stock dropping almost 12% in a single day. Yeah, that was painful. Now luckily Celsius is just a tiny holding of mine. It's about 2.5% of my portfolio. I did bought a bit of it because, well, I made an entire video about why I did so. I will link it up here, I think. But Celsius Holdings, that conference, that consumer staples conference on September 4th, that was really bad. Pepsi buying 100 to 120 million less for their inventories compared to last year, Q3 last year. That saw the stock plummeting, and hard. Now, I don't mind investors for selling out on that news. However, I do think that it is getting really oversold. I don't think really oversold like this is the bottom, but you are getting bad news after bad news after bad news. And at some point, I think it will stop. Because they also said it's not the consumer going to other categories or buying other types of drinks instead of energy drinks. No, the consumer is just basically disappearing. And that will turn around. Now, you have to sit through the pain to get to the good part of it again. So in my opinion, we haven't really seen the bottom yet. However, I might start buying it slowly in order to get some more exposure to the stock. Now, on September 10th, they will have another conference. So if it's anything like like the last one, you better buckle up, because then it's going to be a rough one again. But I will review this one afterwards, I think towards the end of next week, together with the PayPal conference, if anything notable was said. So then we get to the part where I speak about my expectations for the markets. And I think this is quite easily to summarize. Because, well, I think we still have quite some ways down. And at least to the dotted line. And why do I think so? Well, because we are in an election cycle. And we are still quite a bit away from the actual election. And a lot of stuff is going to happen in between. Because if we look at the 2024 election event calendar by CNN, we see that on September 10th, we will have a presidential debate. Now, I don't know if the stock's gonna, it's gonna buy itself upwards towards it, or it's gonna sell off on uncertainty. But afterwards, we will for sure have market movement. I can absolutely guarantee it. Because either we will have more unknowns, or we will have more certainty about who's gonna become the next president. Now, I don't think it's up to me to comment on what will happen in the presidential race itself, not from a political standpoint, but I can tell you what I expect for the markets. And until that election is over, I think we will have more uncertainty about who is becoming the next president. And if there is one thing markets don't like, well, then it's uncertainty. So after September 10th, the upcoming presidential debate for the coming week, I think markets might plummet even further. Unless one of them royally screws up, and we will see something that happened in the prior debate, where it basically becomes certain who's gonna win. Well, then I think we will have more uncertainty, more doubts, and the markets will continue to sell off. Now, apart from the September 10th debate, we will also have a vice presidential debate on October 1st, which will be not as important, but also important for the markets because, well, it's an opportunity to figure out what's going on. And then after November 5th, or leading up to November 5th, I think we will see markets recover, given that it will be a very close race. If it becomes basically not a close race whatsoever because one side is clearly going to win, then we will see markets recover quicker, given that the financial data, the jobs data, is not coming in all too bad. And why do I say so? Well, I've shown these slides before, but we have the 2020 election, we see a lot of market volatility. We have the 2016 election, we see the market volatility going right into November. We have the 2012 election, again, a lot of volatility, markets being weak, going from the middle of October, or the middle of September, sorry, up to the middle of October. The September part, the middle / end of September, that's really where you see markets trending down on the uncertainty of the elections. Now in 2008, of course, you see markets just absolutely dumping, but that was also the great financial crisis. In 2004, you see the markets going sideways, a bit going up, a bit going down in a few days going towards the election. So 2004 may have been a bit different, but in 2000 you also see that market top in the beginning of September going down towards the election. And then going down further, of course, but especially going into September, you see the market's weakness starting. Now, this is also what I expect for this year. I think the jobs data was the initial weakness. We will see this continue for the election cycle, basically, the election weakness in the markets. And I sincerely hope that the jobs data improves over the period of time in order to get more clarity about the direction of the election, of the Fed policy. And we will know where we are going from here to some extent. Because that is what the market needs, of course. And I don't mind some weakness up to November, but I don't want to go in a recession because that's just bad for everyone, including my portfolio. Now, you might say recessions are buying opportunities. However, without a job, you won't be buying stocks. So that's quite easy. You don't want a recession. Some stock market weakness might be good for buying opportunities, but you shouldn't want a recession. Now, what I am doing up to that election, let's take a base case where we see weakness up to November 5th, and after that, we see it all being more clear and less weakness in the markets. I will be steadily deploying some money, but mostly building a bit of a cash position because I put money into my account every week. I can do so. I buy with about 1/3 of the money I put in. For example, Lululemon, which is trading low. Celsius is trading at a really low point. We could also look at PayPal to add a bit more to it, although I think it's already a way too big of a position in my portfolio. But it's, in my opinion, also such a good opportunity that I just had to get in early and big. But I would say we are looking there. Now, I am going to do a video about Ulta Beauty, because this is a stock that's also been selling off very heavily. So if you are curious about that, make sure to subscribe to my channel, because this was from a viewer who wanted to know more about the stock and the opportunity that's going on over there. Now, this will be probably next week, maybe the week afterwards, but I am looking into Ulta Beauty and seeing if there's an opportunity there. So make sure to subscribe to my channel if that interests you. And for now, thank you for watching, and I hope to see you in my next video.